Welcome back to Switzer. It's time for an update from the legendary king of charts, Lance Lai of Accountancy Invest. How are you, Lance?
Very good, Peter. Great to be here.
Yeah, great to see you. Now, when you always start, you play a clip from the last time you were here,
yes,
so we can test out whether you were right or wrong. Okay, take it away, guys.
We'll probably just go sideways, Paul, with a slight upward bias, which is what I said last time, and I'm going to say that again.
Okay, we're going to note that one down, Lance, as we do.
Yes.
Mark you next time you come on board.
Okay, that was too quick for even the smartest viewer to pick up what you actually said. What was said, and were you right?
What I said was that it was going to go sideways with an upward bias.
This is the market we're talking about, or the A dollar?
This is the A dollar,
yeah, okay.
A dollar to US dollar,
yep,
and it has gone up gently. And okay, it's the reason why.
Have you ever been wrong in these clips?
Yes, absolutely.
I
Peter.
can't remember. I always call you the accurate one. Okay, we'll keep it that way. Let's go to what you're seeing now. That's more important
absolutely,
for my viewers. So let's go to the first chart. What were we looking at here, Lance?
So it's a continuation of the A dollar to US dollar cross. And the reason why I've pulled this up is, and I talked about it last time, is that if there was a beautiful chart, Peter, this is a beautiful chart.
Okay, why?
Because can you see 2 years and 8 months is the sideways action at the top.
Yeah.
Then 2 years, 9 months is the downward action that took us to the bottom there.
Yeah.
And what we've got now is a situation where I think the Aussie dollar to US dollar has bottomed, and you can see on the chart there, last time it was S2, and that was a support line. This time around, I've actually raised the base to S3 ever so slightly.
So, and S3 is what level? What's the amount?
S3 is 71.5 cents, Peter. And the R level, I've remained unchanged, which is basically the resistance line of 78.65 cents.
Okay, well, let's just link this to what the Fed's going to do probably in December.
Yep.
They will raise interest rates, and most of us would expect the dollar to fall. But you're saying that the fall, if it comes, is not going to be pronounced. You're not seeing the Aussie dollar drop into the 60s, are you? On the charts.
It certainly doesn't show that, and what's quite clear with this, Peter, is that the 200-day moving average is pointing up. We've actually had a slow increase from the show last time until now, and I think that what we've got is we've got a situation, even on a fundamental sense, Peter, there where there's a return to the commodities story somewhat.
Correct. Yep.
And I think that this is lending some support to the Aussie dollar.
But I know you don't necessarily use fundamentals and try and make the charts. You look at the charts first, and if the fundamentals match up, then you're super happy. Also, the RBA minutes today kind of implied no more rate cuts, which would help the dollar go down. So, so there's probably two good reasons: the resources story, which you put in there, and also rates. Let's see if you're right. Let's go to the next one.
So this is the Brexit story, and the reason why I've looked at this chart is because in the last couple of months, obviously we've had the big stimulus from the Bank of England.
Yes.
And with that, I think there's that stabilisation story that we have in the markets at the moment, where this probably displayed a situation that I suppose there was a certain amount of panic at the time of the decision.
And this is the pound versus the US dollar, correct?
And so where you can see there on the chart where I've got BOE was the time when the Bank of England came and stimulated the market. They had the interest rate fall and then the package of other about 170 billion pounds that they were going to stimulate and stabilise the market. What I've done since the last show is that J was when I was on the show last. I said that we had lower levels that was projected in the charts, 1.259, 1.21, and even 1.18. Now, what's happened is that I've put an N level across the chart there now, which is I call 1.305. That's kind of like a neutral position because of the stimulus, and we have a situation, I think, now where the chart is still pointing towards potential lower levels. However, it is going to probably mark time before it goes there, if at all.
It's going sideways at the moment, isn't it?
Yes, and you can see here, one of the things we always look at, Peter, is that, can you see there's that yellow line on top that's pointing down, which is the 200-day moving average?
Yeah.
That's a fair way away at 1.4. What that always tells me when it's that far away is that it's going to either go there to sort of test it out, or it's going to mark time before it makes the move on the chart where it indicates it could go.
Okay, next chart. So while we're waiting, just tell us what we're looking forward to, Lance.
This is the big market.
Yeah,
the
S&P 500, the US stock market, and you're making a call before the Fed acts on Thursday. What are you seeing?
Well, Peter, you know, you asked me earlier, when am I ever wrong?
Yeah.
You know, this was one where I was wrong in the sense that I didn't think it would break through so soon. Last time I was on the show, it was a point marked J on that chart.
Yeah.
J at that time was a bit lower there, as you can see, and what it did shortly after, I thought it would go sideways, mark a bit more time before it broke out.
Yeah, so it broke out earlier than you thought.
It broke out earlier than I thought, but what it's done is it hasn't really gone up that much.
Yeah.
It basically went up to a maximum of 5%, but it broke through that resistance of 2149. And where I think it's going to go now is that, as you can see, we spoke about this before, when it departs away too far from the 200-day moving average, as it had done when it was at the peak and it broke through, we've got a gravitation back towards the 200-day average now.
Yeah, so you're not seeing upside in the US market on this chart?
I think
sideways?
I think what it needs to do is see the TS level.
Yeah.
I call that tentative support. So what I think it needs to do is come back towards these other levels where I said it marks sideways with some tentative support.
Yeah.
If those tentative support levels can hold and they don't show a significant negativity at these levels of the TS, I think it'll then launch back into those new higher levels.
Okay, very interesting. Okay, next one.
So I've saved this one to last, mate.
Okay.
Because this is really where many of your viewers are most interested in.
I would say so. The ASX 200 index. So what are we seeing, Lance?
Well, Peter, I've saved the best till last. What was said on the last show was at the point at marked J.
Yeah.
So that was in July. Yeah. And at the time I said I had higher targets of T1, T2 and T3. As you can see from the chart, right after the show, it basically hit T1, T2 and T3.
Everyone watches you, Lance, and in effect, they make your predictions happen. So go on.
And so T1 at the time was 2% higher, T2 was 5% higher, and T3 was even higher. Now, what happened is that we've since come back. Remember I said it'll come back to the 200-day moving average?
And that's the yellow wobbly line?
That's the yellow wobbly line. We actually did that just a few days ago, and we've come back up to, in essence, T1. You know, it was really easy doing this chart, Peter.
Yeah.
All I had to do was just extend some of those lines out, and really now, where is it going to go? It's going to go back to T2 and T3, I think, in the immediate future.
That's a good story, Lance. I hope it's right.
Which is 3 and 5% higher.
Yeah, I think T3 was close to 5,600, wasn't it, Lance?
Yes, it was. It was 5,000. Well,
remember that number?
Yep. Remember we spoke some months ago, 5,556. That was T3 when we first spoke about on the show.
And when a tick over T3, that's probably the 5,600.
It went a tick over, had a little sniff back up there again and said, OK, we've got to rest a bit.
OK, a lot of that stuff could unfold if the Fed does not raise interest rates this week, but also says enough to get the market excited.
I think we're looking all right, Peter. I don't think there's a need for big panics anywhere.
Good stuff. I always like to have a Lance Lai trumping of doomsday merchants.
Oh, that trumping is an interesting
It's a key word at this point in time. OK, so that's Lance Lai from Accountancy Invest. That's the show for tonight. Thanks for joining us. See you tomorrow. See my article tomorrow morning, but I'll see you tomorrow night.